Hey everyone, welcome back. Let's quickly go through today's market using three key charts. We'll start with the 10-year Treasury Yield, then move to QQQ, and finish with the broader market via SPY. Today's session was all about rates pressure and weak follow-through in equities. Let's break it down step by step.
On the first chart, we're looking at the 10-year Treasury Yield. Today, TNX is trading around the 4.2 to 4.3% area with a relatively modest daily change. But the structure is what matters here. We saw an attempt to push higher earlier in the session, followed by selling in yields, and then stabilization, not a breakdown. This tells us that bonds found some demand, but there was no aggressive flight to safety. Yields remain elevated, and that continues to act as a headwind for risk assets. So, even though yields didn't spike today, they also didn't fall enough to give equities real relief. That context is critical when we look at tech.
SPY opened near 692 and closed near 690. The ETF finished the session down approximately 0.3%. Several intraday rallies failed to sustain momentum. Each move higher was followed by renewed selling pressure. This pattern indicates cautious positioning by institutional participants. Capital is being preserved rather than aggressively deployed. The broader market is showing signs of consolidation. Upside progress remains limited without confirmation from the bond market.
QQQ underperformed the broader market throughout the session. The ETF declined approximately 1.2% from the highs. A pronounced sell-off occurred during the middle of the trading day. This was followed by sideways price action into the close. Technology stocks are highly sensitive to changes in interest rates. Higher yields reduce the attractiveness of long-duration growth assets. As a result, selling pressure in QQQ remains stronger than in SPY. This reflects a broader shift toward risk reduction.
Putting all three charts together, today's picture is clear. Yields remain high and stable, not supportive. Tech is underperforming. The broader market is holding, but without strength. This is not a bullish confirmation day. It's a market that's pausing, digesting, and reacting to rates rather than leading. As long as the 10-year yield stays near current levels, equities, especially tech, will likely remain choppy. Expect fast intraday moves